Welcome to this lecture example for yield to maturity. Here we are going to be looking at section 24J, basically how we apply it. Now guys, per your slides also, you would have seen that we do this calculation. Initial amount plus the accrual amount less the payment gives us our adjusted initial amount. Now, before I start going into this whole question, let's just have a quick little chat about that again. So the initial amount is your present value when you first issue this financial instrument. The accrual amount is the yield to maturity times the adjusted initial amount. Now, the adjusted initial amount is basically the answer that you get the whole time. When you say initial amount plus the accrual amount less the payment gives us a adjusted initial amount. So all that this tries to do is that you need to always use the latest present value. So for the first, when you do the yield to maturity times the adjusted initial amount the first time, you'll just use the present value, the initial amount basically for that matter. Alright, so guys, let's take a quick look at this question and then start setting it up. So D Limited is a registered VAT vendor with a December year end. So I'm going to point this out to you because this is very important for your understanding, is that this tax year runs from the 1st of Jan to the 31st of December. Now we always need to compare that to our section 24J period, and they tell you on the 1st of January 2013 D Limited issued, so we're the issuer, and we pay interest 100,000 rands debenture with a coupon rate of 10% paid annually. This was on the 1st of January and they pay it on an annual basis. So this means that the section 24J period runs. So what you do now is you put down when it starts, the 1st of Jan, and then you put down when the payment takes place. And the payment takes place every time at the end of the year. So what I want you to see is that we calculate our accrual period for interest. Interest is calculated from the 1st of Jan to the 31st of December. That agrees with our tax year. Now, this is important for you to see because it means then if I calculate 100,000 rands on the section 24J, that full 100,000 rands belongs to the tax year. Now, why? And I know that sounds now very logical and simple, but the problem comes in, for example, if this wasn't on the 1st of January, so just bear with me for a second here. If we went, let's say our tax period runs from the 1st of our section 24J period, when the debenture was issued, runs from the 1st of March until the 28th of February. If you then calculate 100,000 rands here, I want you to see that only March to December falls in this tax year. So you would have to apportion it. You'd say 100,000 times the number of days over 365. That this period was. So it's only that period will fall in this tax year. The period from January to February will fall in the next tax year. So that's why it's important for you to see if section 24J and your period agrees. In this case they do. Alright, so what we need to do, we need to calculate the interest under section 24J. So we're going to use this formula. Now guys, the yield to maturity figure, and this accrual amount is the whole point behind the tax year. Sorry, this calculation. So I'm going to just remind you again what this means. This initial amount is your present value. The accrual amount is I on your calculator times the adjusted initial amount. Less the payment. The payment is PMT on your calculator. Now guys, what is the PMT on your calculator? It is whatever the value of the debenture is, the face value, 100,000 rands, and times its coupon rate. So payment in this case will be 100,000 times 10%. We don't look at the present value or anything strange like that. Alright guys, so now the first thing is you need to calculate I on your calculator. So this you've done lots of times in your career at this point in time, but let's go through it. So you put in present value is 100,000 rands. Please note guys, the 100,000 rands is positive. Why? Because we are the issuer. When we issue it, we give a debenture to someone and they give us 100,000 rands. So we get 100,000 rands positive cash inflow. That is what we see there. That's why it's positive. Payment is the interest that we have to pay the holder of the debenture. I issued the debenture to you, I have to pay you interest. So that's the PMT, and look at this negative because I'm paying you. It's a cash outflow for me. The future value is how much one day am I going to give you back? I'm going to give you back 100,000 rands, the face value of the debenture. It's not issued at a discount or redeemed at a discount or a premium. So 100,000 rands negative because remember I have to pay you back the 100,000 rands that I owe you. The period is 3, N is 3 because I told you it was issued on 2013 and ends in 2015. So 2013 is year 1, 2014 is year 2, 2015 is year 3. Right. And then we say calculate I, comp I, and it gives us 10% as well. So in this case, our yield to maturity is also 10%, the same as the face value. So now guys, you fill this in for each year, and that calculates your interest. Okay, so here we go, just to show you. So the 2013 year, this is year 1. Present value, 100,000 rands. Right, guys, and you'll see now here you don't have to worry about positives and negatives. I would suggest you do everything positive except for the payment. All right, this is the best way. So you need to keep your wits about you here. But when you come to this point, you can just keep everything but the payment negative because we just worried about the amount. You need to still know if that 10,000 is an income or if it's an expense. That you need to know. In this case, we issued it, so it will be an expense. Okay, but this is just a calculation, this whole thing that we do here. But it's a very important calculation. So, 100,000 rands is our present value. Our accrual amount, this is the important one, remember for section 24J, this is the amount that ends up in your tax calc, is the adjusted initial amount, which is that 100,000 rands, times the yield to maturity. The yield to maturity is this 10% that we just calculated. So it gives us 10,000 rands as well. Okay, fine. So 100,000 plus 10,000 minus the PMT, which is the coupon rate, times the face value, so 100,000 times the 10%. So this is the actual cash flow. It agrees in this case to the tax, sure, but it doesn't always work like that. Right, so that gives us an adjusted initial amount of 100,000 rands. So in 2014, make sure to see we take that 100,000 rands times the yield to maturity, which is 10%, gives us 10, minus payment PMT. Okay, and so forth. So what is the amount that we then use for tax? Let me ask you this. What is the cash flow each year? The cash flow is the actual payment. Right? That is not the amount that we use for tax. For tax, we use the accrual amount each year. So, 2013, 10,000. 2014, 10,000. 2015, 10,000. Let's look at the next example. D Limited is a registered VAT vendor of the 31 December year end. On the 1st of January, D Limited issued 100,000 rands debenture at a discount of 12%. The coupon rate attached to the debenture is 10% of annual payments, and it's for a 3-year period. So again, guys, I want you to just pay attention. All of these examples will be like this in this set, but I want you to just remember your tax year runs from the 1st of Jan to the 31st of December. Your section 24J period also runs for the same period. So there's no need to do any apportionment or strange things like that. Alright guys, so here we go. We issued 100,000 rands debenture at a discount of 12%. So our present value is 88,000 rands, positive. Right, which is 100,000 minus 12%. The coupon rate, PMT, in your calculator is again the amount of the debenture, its face value, times its rate. Right, so 100,000 times 10. Can you see there, guys? Right, future value, how much are we going to pay back in future? 100,000 rands. N is 3, so then we can calculate I. So now I want you to see, and this is something that you know again, can you see now our yield to maturity is different from our interest on our debenture. Why? Because of that 88,000 rands discount. So what I want you to see now is, if you've never seen the calculation like this, manually, this is what your calculator does, but you need to understand. So we start our calculation, adjusted initial amount, 88,000 rands. That's the present value. Plus the accrual, which is again the adjusted initial amount times the yield to maturity. So the yield to maturity is this 15.28015,867. Right, gives us 13,447. Less our payment, which is the coupon rate, times the face value of the debenture, so 10,000. Right, so that gives us a new adjusted initial amount. So this is all for 2013. So what is the amount of interest in 2013 in our tax calc? 13,447. So let's go to 2013. Can you see 13,447? All right. Now we have to do the calculation for 2014. So now important for you to see is the following. Our adjusted initial amount is 91447. We now take that amount, 91447, times our yield to maturity. That gives us 13,973. Payment, still 10,000 rands. What is the amount that goes into our tax calc? 13,973. So 2014, 13,973. Right, so now we've got a new adjusted initial amount. We use that adjusted initial amount times the yield to maturity to calculate 14,580, which is our 2015 accrual period. All right, minus 10,000. And then, guys, see what happens? The last adjusted initial amount is your future value of 100,000 rands. This is exactly how this is designed to work out. So your future value, 100,000 rands. All right, next one, 2.3. A Limited is a registered VAT vendor with a 31 December year end. Right, so a tax year runs from the 1st of Jan to the 31st of December. On the 1st of January, A Limited issued 100,000 rands debenture that will be redeemed in 3 years at a premium of 12%. Okay, so we charge more. The coupon rate is 10%, and now important, guys, is the payment happens on 30 June and 31 December of each year. So our section 24J period is 1 Jan to 30 June and then 31 December. So you've got 2 periods that happens. Now, both of these fall within the tax year, as you can see, in a complete tax year, so we still don't have to apportion. But you need to understand that we're going to do 2 calculations. So, when we fill it in now, present value, sorry guys, I almost thought I read here. The debenture will be redeemed at a premium of 12%. Okay, so it was issued at 100,000 rands. The payment, PMT, is still 100,000 times 10. The future value, it will be redeemed at a premium, so plus that extra 12%. N is 3 years, but how often a year do we pay? Twice a year, so 3 times 2 tells us we've got 6 payment periods. And then we calculate I. Okay, so now it's the same calculation that we performed. But what I want you to pay attention to now is that we have 2 periods per year. So year is 2013, right? What are the accrual periods? We have the first one on the 30th of June, and then we have the second one on the 31st of December. So those 2 amounts, 11,498 and 11,670, that is our interest for 2013. Can you see? So we do our calculation like we've been doing it all along. There's our accrual for 2014 and our second one. So 2014, 11,862 and 12,076. Right, guys, and so forth. So if you have more than 1 payment period, you have to do this more than once. So if you have 2 payment periods a year, you have to do 2 of these. If you have a payment every month, you have to do 12 of those. Right, so this is exactly the same as your calculator does. And your calculator, what you just usually do is you go P1, P2 or something like that to calculate this total interest. Here, as you can just see, this is what your calculator does. You can do it manually as well.